Hi, Bo here from High Tech Investment, and welcome back to the channel where today we're going to have a new series. Basically, we're going to talk about grid trading, how we're going to set it up. Now, some of you that have already subscribed to my channel for quite a few years know that I have a lot of different grid trading robots in here. And obviously the strategy over time has changed. The market has changed, especially here in the last year, 2024, beginning of 2025. We have seen a lot of movements in the markets, especially back in March and April, where we had the Japanese yen run away. Later on, we had the Swiss francs in July and August. And when we came to September, October, and the rest of 2024, we had also US dollars on several currency pairs, also making incredible high drawdowns. Not to mention, all of a sudden now with the new tariff war going on here also in the US against the rest of the world, then obviously we saw further additions now to also this. And that means that we have to change our strategy in how we actually set up all these grid trading EAs. Now we have found a solution for this. We have actually started to implement these things. We were testing it at the end of 2024. Start implementing it also for some of the new EAs that we have in here. And we're going to have a general discussion on this particular part today. Later on in the series, we'll go into the individual ones. So the ones that we're going to talk about here is the profit retriever. So this one is the oldest one. It goes several years back. We have traded this one for a very long time. We put that on the side because we wanted to try also the new ones. The profit retriever never really stopped trading. Once it closed off a trade or a series of trades, it'll basically just start a new one. So we put that a bit on the side, but it's still the same principle all the way through. We have the wave liberator. So this also has a certain entry point in here, which is different from the profit retriever itself. Same thing with the RSI liberator. That has an overbought, oversold part in here. That also makes it a bit easier and sometimes actually stops trading completely, which we really like. But again, they are all grid based. Then after that, from Expert Forex, we had the HDA also doing a bit of a hedging against it, but not a full and real hedging in here. But it cashed in quite nicely, even though some of the accounts went into drawdown. So that was a good part about that one. Again, different types of entry, different way of using the grid itself. And then we had the lucky trader, pretty much a gamble EA, ending up with whatever it decided on the currency pairs. That has also proven to be extremely good. Now that particular one here is very hard to backtest because it's random all the time. Means that you'll get different results, and that's also why we actually developed the new system in here. And obviously these are the information and experience that we have over the past couple of years that now comes into play. Then the new one was the bell trader, also from Expert Forex in here. Again, using the grid in here, and we're actually going to have some examples also from the bell trader just to graphically illustrate exactly what we do here now. And then of course we have the simple grid trader. So this is now generation 3. We've actually set up 60 new accounts for this particular one here also in the past week. So all of these here follow the same grid patterns. And obviously entries are a bit different, but the way that you have to set up your grid trading overall is pretty much the same. And that is what we are discussing here today. And then after that, in the next couple of series, we're basically going to expand on the individual ones, all the way down to individual EAs for entry exit points and exactly how you're also going to have to trade it and how you can actually backtest it. So we understand that for many people, when you look at these particular EAs, you will say, well, this is a Martingale strategy. And Martingale strategy actually comes from the casino part, especially around the roulette table, where normally you will bet on either red or black. So if you are betting on the red one and you are losing, basically the concept here is then you have to double up the initial investment or the initial trade that you did with the casino here. So if you started $1 and you lost, the next one will basically be $2 in order to get your gain back, the original $1. If you then lose again, you will now go up to 4. After that, you'll go up to 8, 16, 32, 64, 128, and so forth. And obviously this particular system here is used by many around the world. And for trading, it is basically called the Martingale strategy. And that is not what this is all about. There is a lot of different details in these EAs that can compensate for it and still make you money and be also safe, because we have adjustments of the lot size in here that we can make changes to, so we never double anything up. And then we also have the grid sizing that we can basically adjust from when it's supposed to start and how much it's supposed to be expanding every single time the trade goes against us. So all these things are part of these EAs, which makes them a lot safer. And that's also why it is not a pure martingale strategy anymore, because that will blow all your accounts instantly. So, but there is ways, of course, to get around these things, to have some safe trading. And that's what it's all about here today. So exactly what are we going to learn? Well, hopefully you will either get some information here in these particular videos today and the series that is coming here, to understand better that if you have other grid trading robots in here, how you can actually set them up, what you're supposed to be aware of when these items and things happen in here. Or if you think, okay, this is simply too much, there's too much math involved, there's too much measuring involved, we rather want to just sit back. And then you can do that through the Expert Forex coupling service, where we have a lot of these EAs here already. On the coupling service, people are copying in the signals instead, but at least now you will understand how we set up, how we determine the individual currency pairs, what are the grid sizes, and if things go wrong, what is actually happening, what can you expect from the EA. All of this is part of this particular video in here that we're going to go through here today. So the first thing you do is you basically pick out your currency pair that you are interested in. In this particular case here, we have taken the New Zealand CAD. We've put it on a 4-hour chart. And then this is recent. So this basically covers up to the middle of April, end of April here. And it goes all the way back to about 22nd of September 2024. You can see all the price movements all the way through the 6 or 7 months that we have in here. And based on this, you can obviously try and set up your grid. And one of the things that we are looking at, especially when it comes to the grid trading, is basically the extent of the longest trends that you have in here, and then when you get the reversals. And it is clear, obviously, that the recent times in here with the New Zealand Canadian, so that had a big dip, so basically lost value against the New Zealand dollar, and it dropped all the way down to here, and it has now basically recovered pretty much everything. Now obviously this is the main area that we want to have a look at. We can see that we have another area in the beginning, so this is back in September, where we also have a bit of a trend. It never really recovers. So again, there could be an issue here also, why that if the trade is going against you, then there has to be enough retracement in this particular one. And depending on how you set it up, you would normally have, if you're not using the full martingale strategy by doubling up instead, but where you are slowly but surely increasing grid size, you might also be changing your lot size slightly more and more for every single trade as it goes against you in here, but you need a retracement again. Normally it should be somewhere around 40 to 60%. So when you have a dip of 1,000 pips, you need a retracement again, somewhere around 400 to 600, depending on how your settings are. So that's important to see if there's anywhere where this can actually happen. So all this you have to take into consideration. So make sure that your grid pattern is big enough. So we're looking at this particular one here saying, okay, this might be the biggest ones, but we basically suggest that you actually expand your view a bit more. What does that mean? Well, it actually means that you go up to a daily chart instead, and we can still see the big move that we had here in recent weeks. So this one here is quite big, but when you then have zoomed out, you can see there's actually bigger areas. This goes all the way back to August 2022. So there's a major setting change in here. And again, if you would have just had the audacity here to set up the grid within the numbers you have here, you might actually lose out, first of all, with what recently happened. So that could blow your account. Or if you would have something recent here also again, where this could have happened, and then you would blow your account, both if it goes one or the other way in here. And you can look all the way back basically to May 2019 to see if you would be covered with a grid size that will cover this particular one in here. Now you have to measure this particular one up, of course, exactly where we are. And there's various tools to actually do that and help you out for this particular one. Now this is a trend analyzer. So this is actually a free gift from Expert Forex. Now, because we are part of the premium forum service in here, we actually get that one for free. So what this one does is you put it on any chart that you can find, and then it'll provide you basically with turning points in here. And then it'll measure them up, and it'll measure them up in two different ways. So you have what is called the vibrations, so the slow and the fast vibration in here. Then you have a list of different currency pairs. I didn't put too many on because that will basically just muddy the waters for this particular video in here. You can see that the blue one is the one with the lowest number, so 340. Great British Pounds New Zealand is the one with the highest, 1119, and we are talking about pips in here, as we always do with the trading graphs. And then you can see New Zealand CAD has 488, and on the buy side also here 435. So you will have the longest one for both buy and sell, and you will have a combined average in here. But at the end of the day, it is important that you take the highest numbers. Now we have gone back here, so this is again a 4-hour chart for the New Zealand CAD in here. And just to show you again how far they are going, you can see some of the biggest pips down here is 400. And then it will go all the way up here to 487. So that is pretty much the biggest one we have. You'll notice that there's a couple of stops in here because, again, the analyzer basically looks at retracements, and it'll do that. So it cut this particular one short. So this one is only 400 long, where you can see the other one here is 487. So that is something to be aware when you're looking at it. But if you wanted to trade most of them, you can see about 200 pips, and then it turns around again. Sometimes it's less. So obviously, if you want to make a lot of money, you make that very, very small. But the question is, you never really know when these big dips come in. So if you basically set up your grid trading to handle these 150, 116, you're down to 80 in here. You have again 114, so you're making a lot of good money in here. You have a very tight grid every single time. You basically move past, and you can basically visualize that these are the grid patterns. Every single time they go through those, they will either cash in or open a new trade. And then when there's a retracement, when it's back in positive, it will close all the series of trades in here. So this is important. But as soon as you then have one of these items that are sticking out, basically dropping because something changed in the market, similar to what we have experienced here in April, then your account will simply be blown. There's no doubt about this. You will basically go in minus 2,000 or 3,000, so very, very easily. And most of the accounts that we are now trading is only $1,000 accounts, because that's what most people can afford, including ourselves here. So we prefer to have many of these set up instead. You'll notice that this particular one for one way is 187, and the other one coming down is about 299. So again, these are good numbers. But if you go to another level up again, similar to what I did before, you'll see some completely different numbers in here. And the first one, you will obviously notice New Zealand CAD, you'll have a buy average of 325. You'll have sell average of 342. You will have a combined, which is the average of those, with 334. But now look at the longest one in the slow vibration in here, 1193. And the longest one over here for the fast one is 488. So you can ignore the lowest number. You have to go with the 1193 in here. That one is easy to spot. It's basically from the bottom up here and then up at the top. You'll also notice that there's no retracement enough as we go along. So if you're unlucky and one of the robots that I mentioned to you already here before, if that goes in the wrong direction every single time you pass one of these grids in here, so this is a very tight grid, but this is again only to visualize for you, then obviously you will have a tremendous amount of trades, more than about 20. And that also means, again, you're gonna blow your account. You have to basically open up the grid size, and that's what I'm gonna show you here next. But the number that we need is the biggest number in the graph here, 1193, because if we keep within that graph all the way from here and then also to the bottom, anything that happens in between is going to make you money. It's going to make you less money, of course, with a bigger grid. There's no doubt about that, but it will also keep you safe. So the idea is to look back to see exactly what are the biggest moves. Is there any retracement? Is there enough retracement in here to get out of the trades? For this particular one, there wasn't, similar to what we also saw here. There was a small little retracement very quickly, and then it dived down again. So you have to cover your grid sizing to take all these things into account. Same thing also for some of these. You might be very, very close to closing out the trades. Again, 40 to 60%, depending on how you set it up. And then that obviously means that it will continue further up again, which will give you more drawdown if it doesn't cash in. Obviously, it comes back again, but it only can be managed if you keep within the grid. And that means basically you put down a grid over this particular graph, and then you divide it into individual sections. So this is what I try to illustrate you to here. So I've just given it a couple of fancy colors so it's a bit easier to see. And again, I'm actually using the Bell Trader for this particular one. You can see this is the Bell Trader. It's the version 7 that we have in here at the moment. Now there's a specific part with the Bell Trader. That's because it has the medium line in here where normally the price movements moves around. So this is done on a yearly basis, and it's also done with more than, I believe it's 600 or 800 days that I put in here to get the lines basically lined up in the right way. And that shows you again that the market will move in these particular areas. So what we have done here, we know already 1193 pips is the maximum that we have seen in past, and we always have to go with the past, of course. We don't know what the future is going to bring, but at least if we look at the past, we learn the history, then hopefully we can also prepare for the future. So one of the things that we do in here is we're going to make sure that we cover this particular 1193 pips into a grid size, and we normally use 10. Before we used 15, but everything has certainly changed in the last year. So that means now that that particular area in here, the 1193 pips, is divided into 10 grids. So if we just count through them, you'll see the lower 5 in here. So you will have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So basically upper 5 and lower 5, that is the grid that you have now locked in. Everything that happens within this will keep your account safe no matter what. You can obviously be brave and basically shrink it in. That's not how we operate. So now that we have this, and I have to tell you also that the individual grids are the same gap right now. We're going to make some changes to that. But this is the grid, just to show you exactly how you have to set it up. Now it's also a good idea to have a closer look and see how some of these will actually be moving, because what we do on part from this, we actually put a 20% safety margin in here, just in case it moves out of that particular area. So we have to be aware that other things could happen. We have to give our account a bit of breathing space at a safe margin. We are using 20% at the moment within our accounts. And again, you can now see that the lower 5 has actually gone way beyond the picture here that was normally touching before. The same thing up here, the lower 5 goes all the way up here. So you now have a bit of a margin in between. So where you can feel safe and actually cash in. So this is what you need to do in order to make sure, not any back testing, anything else. This is the real way to go and do this. But from there on, obviously there is more to get, because when you have a system like this set up, you're not going to make too much money, because we know, again, similar to what the bell trader is showing you here, that a lot of the price action is going to go, as you can see here, between the upper one and the lower one. A lot of the price action has happened here. And we just agreed before that every single time we run through one of these grids here, we are cashing in. We are setting up new trades. When it hits the next one, we'll be cashing in. And if it actually is similar to what we had here, it will basically continue to open trades in the wrong direction, unfortunately, but that is how the EA is set up. And then it will cash in when it comes back, about the 40 to 60%, depending on how you set the final settings up. So, and you basically want to make sure that you get the risk taken care of, but at the same time, you also want to make sure that you're actually making some kind of decent money. So what is happening here, again, if you look now, the upper 4 is actually right where you have the top part. You can see the lower 4 is actually in here. So, and that will not change, so because we have the grid itself. But when we then change it around, you'll notice here now that we're actually starting with the smaller grid instead, because we know that this is the price action where most things are happening. This is where it goes through the most times. So we try to narrow this particular one down, and you'll now see also that the first areas is actually small. And then as you go further and further away from the center line, it's now growing. So that's how the bell trader works, but it would be in the same manner in here, except that when all the other EAs is coming in, it starts off with a small grid size. If it goes the wrong way for this particular one here, it will then expand. And if it goes in the wrong direction, continues, it will open up the gaps every single time. So that is just a graphical illustration that helped us also understand exactly what we needed to do in the future in order to make sure that we actually kept some safe trading. And you can see the upper 5, it is still in the same place in here. The upper 4 was just touching this particular one here, means that we will normally have a range of trades open. So for this particular one, if we entered that section, it would be 1, 2, 3, 4, 5, 6, 7, just 8 trades open, which is pretty much the maximum that you can have overall in here. If it goes much beyond that, you're going to start having a look at the margin call, and then it all comes down to your leverage here also. Most of the time for these systems, we use minimum 500 to 1 in leverage. That is the best way forward. So this is exactly how things are set up and how you can actually trade within the grid and then be safe and still basically also cash in as we are supposed to do. That is the name of the game. Now, if you don't have any of the fancy tools available to yourself, MT4 actually has a way where you can still get this done. And one of the ways is basically you go on the MT4 platform up here, you put on the cross that we have, and then you drag it on to the individual chart that you have. You put it, either you can put it directly on here. So this will take you up, and then it'll tell you that this is 11 and 95. So you can see it's almost as accurate as the, the first number in here is basically as we move, this is the number of trades. So you're not interested in that. You're interested in the middle one. The right-hand one is actually the price at that particular price level shows up. In this particular one, you can now see 12,004. Now, what that means is that you have to ignore the last digit, and this is 1200 pips, or if we get a bit more precise, we can cover it here to about 1195. It's almost as accurate as what we have seen otherwise. If we do it again, click again the cross over here, and then you can put in on the graph itself up here saying, okay, it's for that level down to this we want to cover. And then this one says 795, and that will then be the area that you have. And then you have to add an additional 20% if you don't want to go for the full blown in here. You can obviously try and do a few other ones to see how far they are, but normally the eye will not be lying to you too much. This is on 730 pips in here. So it's a very good tool, and it is freely available on the MT4 platforms in here, also on the MT5 if you prefer those particular ones. But you can basically go and measure the items that you want, saying, okay, I want my grid to be from here to this particular point here. That is 1190. So again, that is similar to what we have just measured out here before. So we're very happy with all the trades that will be continuing within that particular pattern. Obviously, when they close, and if this particular one here will start to move up again, then that grid will go from here and then 1200 pips up. So it's always from the last trade that you have put in. But that's a good way of actually measuring up yourself if you don't have all these extra tools here out to help you. So now you've seen exactly how we set up the grid patterns in here, what it is that we are looking for. We are looking for some of the longest trends. We basically measure them up in here, and we also try at the same time to make a pattern that we know that we are safe and sure. Put in the 20% margin here just to be on the safe side for any future trade wars or anything else that comes out. So that is one part, but we also have to look at the gap scaling because we still want to make money also out of this one. Means that we're going to start off with a smaller scaling in here, and I'll show you exactly that next time in the video how we set it up, because we can see that the patterns are very similar. It doesn't really matter what EA we're using. It doesn't really matter also which currency pair that you have, as long as you have set the grid as we've done here in the beginning. The rest will pretty much come self-explanatory, and you can do this for some of the EAs even that can really be back tested. So the lot multiplier is also an important part. As we said, we're not going full Martingale where we're going from 1 to 2 lots to 4 lots to 8 lots. That will blow your account in about 2 or 3 grids. You will never get to 8 or 10, that's for sure. But you have the options of either lowering your lot size, which will then be a bit more safe. You will have lower drawdowns, but it will also require further retracement back up in the area of maybe 60% as we talked about. Or you go the other way and they're saying, okay, I'm not going to change the lot size at all. I want it the same. Or again, you can slowly increase your lot size also. That will unfortunately increase your drawdown. But in order to limit this, you only do it slightly. But it will help you also close the trades a bit earlier. So you might be able to close them with just 40% retracement instead. This is actually how we normally operate most of them. We have operated differently in the past, but our experience shows that, and I'm going to explain to you exactly how this is done and also what to backtest. Because when we have set some of these items here now in stone, that we know how we want to build up our grid, we know how to do the lot sizing, we know how not to blow the accounts, hopefully. Then the next part is there's still a few things that needs to know, because there's still a few to backtest. That can be the entry points that we have in here. And the last part is which ones are you supposed to do together. So we have a certain way of doing it where we can get some good data out of it, because if you are trying too many different things at the same time, it's not really working out. So what we see in here is we have a certain way of doing everything with the individual EAs, and we're going to try and explain to you a bit more about that in the next series. So hopefully if you like this particular video here, please give us a thumbs up and a like. If there's anything that we didn't cover in this particular video here and you would like us to do that for the next part on this particular series, then please put it in the comments below. And I'll also make sure that all the links for everything we talked about here will be in the video description. Hopefully you will See me on the next series in here, where you'll know a bit more about the grid sizing and also exactly how to get the optimum out of it, because profit at the end of the day is what we are looking for. So until my next video, hope to see you around. Bye bye.